Coming in this show, my commentary on the financial markets and the big bungee jump. A preview of a member video. We're going to look at the semiconductors and industrials as Arvi does a great job reviewing AMD and URI. We'll also bring you a tools for techs. It's a little segment that we're going to bring you where I show you my favorite momentum indicator, and we will look at the 1 to 3 month view of the stock market. That correction, is it over already?
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. The stock market put on another good show last week as investors cast aside fears that the COVID Delta variant will bring more shutdowns. The stock market recovered from a very weak start, and those charts look like a big bungee jump. Monday, there was a huge selling wave early on. Fears of shutdowns because of the COVID variant and because OPEC Plus deal came out, and that's going to bring more production, and there was a lot of selling in the energy stocks. And the S&P 500 was down 55 points pre-market and was down as much as 86 points early. Travel stocks got absolutely hammered, and those stay-at-home stocks that did well while the pandemic was on, that's Etsy and eBay and the semiconductors, they were actually ticking up in the face of that very weak start. The Dow for the day down 725 points. That was the worst day in 8 months. And those few hours of very hard selling was really all there was on the downside for the week. Tuesday, IBM earnings had come out, and they were positive and set a good tone for the stock market. And bargain hunting was coming in as a lot of stocks that were beaten up pretty badly got some bids, especially those transportation stocks. And the Dow recovered 550 points of that big loss, the S&P 500 up 63. Wednesday, buyers, well, they didn't stop. They continued to come in and push the S&P 500 up 36 points. It was helped early by some comments out of the Biden staff. They're pushing him to reappoint Chairman Powell to the Fed. Well, that does make some sense because the talk is that they want an MMT chairman, modern monetary theory. Well, I think they have that in Powell. They don't really need to change. So Powell, very supportive to the massive spending in the way that he runs the Fed. So I don't think they need to reappoint anybody, to tell you the truth. They're going to keep wrecking the country just the way they're doing. Thursday, brief decline as total claims for unemployment, that's total claims for unemployment, fell by 1.2 million. That is because the states are beginning to cut off the aid from the pandemic, so there's not that much that's available, and that brought some selling, but there was a late surge in the day, and again the S&P 500 puts on 20 points. Friday, well, the market's making it 4 in a row after that big decline on Monday. Mixed earnings results. Intel is down pretty good and knocking down the semiconductor stocks. And Twitter got good earnings, very good actually, and that stock moving up. So we have mixed action going on in the techs, with the NASDAQ, though, coming on strong again today. The earnings from Intel didn't really scare that much because the market is putting on some pretty strong gains. Actually, here we are on Friday with a full recovery now from the big decline we saw early in the week, with the S&P 500 and the NASDAQ at all-time highs here on Friday afternoon. So the stock market correction was barely perceptible so far. There was a brief scare in the indexes, but buyers came back quickly, as you can see. Under the surface, there were corrections that were much deeper. It's really the same story today and this week as we have seen, with the mega caps hiding a lot of weakness in the market. Small cap Russell, well, that had fallen some 6%, and it's rebounding, but not a whole lot. The Dow Jones Transportation Average was down as much as 13%, and that has hardly rebounded so far also. The XLF, which is the financials, they were down 9%, and they got a tiny little uptick here. And the XLE, that's the energy stocks, they fell 17%. That was really one of the worst indexes. And they have just fallen and can't get up. I mean, they're barely getting any upticks at all. So like I said, it's still the same thing. The mega caps are really holding the market up as we're at all-time highs. As we've shown in our analysis, and if you look back over the last couple of weeks, the mega cap patterns do say that August has a lot of risk. And we have expected that late July into August would be some of the highest potential for declines. With the S&P having only corrected 3.6% in that brief little hit that we saw, we think that was really just a warning. As all of the top-weighted techs, the ones that you could look at the 9 top weights, and they're basically 50% of the market, all of those are due in their patterns to have declines into mid to late August. And that does set up August as a problem month. The 10-year bonds, when you look at those yields at about 1.28, they're also giving you a warning in here that the market is looking past this big rebound in the GDP. It's expected that the GDP will be up about 8% for Q2. But then when you get past that, well, I think the bond market is starting to look, well, past that in some significant way. So the odds are pretty high that there's going to be a selling squall that comes into mid to late August, based on everything we're looking at. There will be a reminder then to the investors that the markets can fall. They have not completely erased declines. But we actually do think that the bull won't be done yet. So I'm going to show you, when we look at the end of the show, we'll look at the SPY 1 to 3 month view, what we're looking for in here, and why we think August will be weak. But then after that, more new highs to come in the stock market. Here at midday on Friday, stock market major indexes up like 1.5 to 2.5%. Very, very strong after that bad Monday, and pretty amazing actually. Bond market, 30-year bonds, and the TNX, the 10-year yields, all around unchanged on the week. Gold market down about $14, and silver down 56 cents. And it really seems like investors are a lot more interested in stocks than they are in any of these metals. Also weighing a little bit on the metals was the strong dollar. Our gold analysis, dollar analysis, and energy analysis has really been great. So if you're not following our analysis in all of the markets, and you happen to only look at our stock market analysis, you're really missing out. Our Future Speak show covers 24 different futures contracts, including Bitcoin. So you really want to be a member to be able to see that on Wednesdays. So for the week, oil up about 45 cents. This was a wild week for oil. It had a low of about $65 on that OPEC news, and now gets up to about $71.60. So a over $6 rebound on the week and to this small gain. But it is in a risky area right now, and we do think that oil is going to have a rough time of it over the next several weeks. Again, we show those charts in the Future Speak show on Wednesdays for level 2, 3, and 4 members. Coming up in here, we're going to do a preview of the stock sectors video for our members. Arvie's going to show you great analysis in here. We're going to do a tools for tax little special in here where I'm going to illustrate to you my favorite momentum indicators and how you can take the ride. And that's really the key to success, taking the longer ride in your positions. And we're going to look at the stock market 1 to 3 month view where we look at the SPY. Some great stuff yet coming up in the show. Make sure you go to askSlim.com, explore that site. If you're watching this on YouTube, do subscribe to the channel. Click that notification bell so you know when we put videos up. And also give us a thumbs up to this video. Follow us on Twitter at askSlim. And if you have any membership questions on our memberships, you can write that directly to Brian at askSlim.com. All right, this is a preview of a member video. RV is our very, very expert cycle analyst, and he always does fantastic instructions. As a matter of fact, he does that every single day in our trade ideas section where he teaches about the trade ideas that we put up, so you don't want to miss that. That's level 3 and 4. And he's going to now look at AMD and URI as we show you a sample of that video where he looks at 20 different symbols and really gives you the analysis and teaches you around that. So make sure you watch that preview coming right now.
So this is AMD, and this is also really a very positive longer term pattern here in AMD. We have been going sideways here for many months now, and really ever since August we really haven't made a lot of progress. This is really just helping us to build a new base for likely one more leg higher. The next key low is due 719 to 96. Watch for this to form a flag as it's doing, and then watch for a breakout and then overall a retest of those old highs, and then likely moving higher. The old highs come in around 99.23. The next key low is also due 719 to 96. So all of this is really lining up quite well. Either the low formed here, or we have one more test back down into the next daily low, followed by a push up. So that's what we'll be watching for. I am noting that the low may have already formed just to be aware of that possibility, but overall the highest odds would be one more test down followed by a push up. So this is United Rentals. For URI, we have a dominant weekly cycle, which is also broken up into the minor thirds that you see right there. And we have likely just formed a key bottom and are getting ready to turn up here. You can see that the key low was due 517 to 75. The low formed the week of 614. We have also formed a higher low relative to our key weekly cycle low and are getting a nice bull bar here so far this week. So all that is likely indicating that a bottom is formed and we're entering into this new intermediate term rising phase. Also note that our weekly momentum has also turned positive, so all this is lining up quite favorably. On the upside, we are looking for a move through the prior cycle high here at 354, and then a move up to this intermediate term fib here at 380, and that's with URI trading 319.50. So looking for a pretty meaningful move here in URI. This is really a very solid pattern here as well.
Tools for Tax. Tools for Tax is one of the segments in our videos that we do. We have 10 different segments in our videos. Just great stuff if you go look at that. And I want to share with you a brief little Tools for Tax video here where I'm going to share my favorite momentum indicator with you. The 47 years that I've been trading, I have seen lots of changes in these markets and lots of need to adapt to the changes. And the whole key to surviving and thriving as a trader is really being able to see the changes in the market, not sticking to what you do all of the time, but adapting to whatever you do see. The last couple of decades has been just amazing because what I've seen is the de-decimalization, the HFTs coming in, high frequency trading, dark pools, and of course central banks taking control of the market. What this has really done is it's brought the need to do analysis and weight the analysis differently than I had in the past. It's momentum. The market gets in one direction and it keeps going in that direction. And it happens a lot in many of the markets and the futures also. So it's really important to be able to identify momentum and even, to understand when momentum is creating inertia. In other words, what are the chances that it's going to keep going in the direction it's in? So I wanted to identify some indicators that could help with that. And some years back, we created the slim ribbon. So the slim ribbon is what I'm going to show you here, and what is called the slim ribbon PO. These indicators are, in my opinion, amazing, and I'm going to show you that. And you'll get a sense for how you can use this to take the ride, get on the right side of that momentum, and get the bigger wins, and of course the smaller losses, because it will keep you from fading the market. And what a lot of people do is get in trouble because they fade the market too much. They anticipate a turn and even do it with big positions rather than believing that the momentum will keep the market going. So that's what we're going to look at here, the importance of the momentum indicator and the quality of the slim ribbon and the slim ribbon PO. So we're going to start out by looking at this gold chart. So we're looking at /GC if you're on Thinkorswim, and we're looking at a daily gold. Now, this is the slim ribbon. I'll tell you about it in a second. It's free. You can put it up on your Thinkorswim platform by downloading it from the askSlim site. It's also available on TradingView and Wealth 365 charts, and we expect to get it up on a lot more as we move forward. The slim ribbon PO on the bottom is a proprietary indicator only available to our level 4 members. And when you become a level 4 member, you get the script for that, and you can put that up on your Thinkorswim platform. So the slim ribbon is made up of 3 exponential moving averages. What had happened was that I was looking at exponential moving average ribbons, and they tend to have around 8 moving averages on them, and they begin to lay on top of each other, and you don't really know how far they're going to go. So it was just too much information, and it didn't really give you a good sense for the market condition. And that's what we really want to do, is get a sense for that. So the slim ribbon, as you can see in here, we'll see that little arrow right there. When the 8 EMA gets above the 13 and the 13 above the 21, that is a positive condition when they're all pointing upward. And that is likely to give you upward movement. When it ends, and the slim ribbon will give you a neutral signal and then potentially a reversal with the red signal right there, it then tells you the direction is likely going to be down, and momentum the selling is bringing in downside momentum. And you could see that right in here. So this goes back to December of last year. Right over here in January, it changed from positive to negative. It stayed negative over here as the slim ribbon, the 8 went below the 13, which went below the 21, as you can see. And then the slim ribbon becomes resistance often as it's doing that. It's a great indicator. You can see in here where it turns positive in April and how it gave you that great indication right over here. Here it turned negative and slid to the downside. And this gray zone right over here is when the slim ribbon is laying on top of itself. It's not giving good indicators. That's that gray arrow we put in there for you to see, so you will really understand that. The slim ribbon PO adds in an oscillator that tells you when it is likely that the momentum is going to continue. when you could see in here in the decline where it gave you this signal right over here, it warns you that the negative momentum is still in control and it's likely to be moving down. And you can see all of these gorgeous signals right over here. As it gets up above the 25 on the oscillator and then turns back below it, you get a signal. And when it's positive and gets below the 25 and turns back above it, you get an upside signal. Again, this is a proprietary indicator, and you can only use this right now as a level 4 member by becoming such and downloading this onto the thinkorswim platform. Later on, it may be available on other sites, but it will most likely remain proprietary. So you can see the high quality in here, how it really helps you stay on the right side of the market. Let's just look at some other symbols in here. Silver market. You can see in here the quality of these signals in here as it keeps you on the right side, on the downside, and on the upside. And you can see that the silver market right now, the gold market was clearly just the slim ribbon was laying on top of itself, and you were not getting good indicators. But here you can see the silver market is much weaker. Note the support moving up here. Note the resistance over here. So not only does it give you direction, it also gives you a sense of support and resistance, and the slim ribbon PO telling you when it's pretty likely it's going to continue. So you can see that in silver, that is still looking quite weak. And if you followed our analysis in Future Speak, you know that we thought silver was even weaker than gold, and this really shows you that when you look at it. Let's take a look at a couple of stocks. You can see Home Depot right in here. Look at the quality of the signals in here as the slim ribbon told you when it was positive, the slim ribbon giving you the signals on the bottom, and the same thing right over here when it was negative. It turns negative right here, and through this period it moves down. You got one signal here. You note that this stays red right over here when it's negative, and when it's positive, the slim ribbon PO is green. So the oscillation doesn't mean a lot other than giving you the signals in here. So this does not mean overbought. It can't be overbought when you have this kind of strength. It just doesn't give you that signal. When it gets down in here and you see these signals, it tells you there was an internal correction that went on, and it's likely to keep moving on the upside. Here it moves down, an internal correction came, and it tells you likely to continue to move to the downside. Look at the positive signals right there. Quite good when you look at Home Depot. Sometimes this will be a little choppier when the stock is choppier, and it won't be as clear as this, but most of the time you get fantastic signals. I mean, I'm going to stay here. You can see all the way back here as we go back to a year ago, November, and all of these positive signals, just incredible. Here it went neutral on a little correction and then turned green again, positive, positive, and look what happened right here. Negative signal, the slim ribbon turns down, and look at these signals here. Just absolutely spectacular. I mean, I really, really encourage you to, if you're not a thinkorswim member, you can open up an account through our website right on the main page and put all of these on thinkorswim. Let's take a look at the transportation average, which has been one of the biggest corrections that we've seen. Let's just take it from this point right over here where it had been negative right there. Here's your positive signal right over here, and you can see as it rides up the slim ribbon right there. Note that gravestone doji right there and what is an evening star, which really called the top. Here you can see the positive signals after that, but it really started to change as it couldn't get higher, and then you went neutral right here. Here it goes neutral, and here it goes negative. You can see the slim ribbon begins to widen as the inertia picks up, and that's a key thing to look at. Here where it was real flat, the signals are not really valid. You're not getting anything. But then as it starts to widen on the downside, it tells you, and you start getting more signals. And the transportation average, it's bouncing right now. And based on our work, the transportation average may be getting ready to make a bottom. But right now, this momentum indicator says not yet. Let's take a look at the XLF, and you can see a very similar thing in here, as it was positive mostly in here, nice signals as it moved up. Here, look where it turned negative. It turns down over here, and then the slim ribbon is very, very tight in here. So it's not giving you the best signals. These signals right over here are telling you it's likely that the downside is still going to come, but when you see it this flat, you're going to start to say, well, maybe those signals aren't as high quality at that point, and maybe you're trading in more of a neutral fashion, and when it starts to widen out, you'll get some better signals in there. But still, you could see in the XLF, it was very high quality when we look at that. So some of you may be thinking, well, the tools for techs, that's the daily chart, but I trade shorter term. And can I use this looking at intraday charts? Well, the answer to that is yes, and I'm going to show you that right now. We're going to switch over now, and I'm going to close this XLF, and I'm going to look at a 30-minute chart. I want to look at the SPX right here. Yeah, same thing. And you can see as we look back here on this 30-minute chart, we're looking back now a couple of weeks. 10-day chart, and for this 30-minute chart, I think for short-term traders, a 30-minute is a good time frame to give you your directional decisions. So in other words, when this is positive, you're only going to make long side trades. When this is negative, you're only going to make short side trades. When it's positive, you're only going to make long side trades. And you can see in here the slim ribbon PO giving you the nice signal. Sometimes it doesn't give you the signals when the market is so strong and it can't dip under the 25 or over the 75. So that was, you can see right here where you got the negative signal, how good this was. So imagine if you only use this for your directional guide, how great that is when you look at it. So that's a look at SPX. The NASDAQ is pretty similar. I'll put that up on the 30-minute chart also. Note this area that we highlighted where it was flat. The signals weren't very good. But then where the slim ribbon starts to widen, your directional signals are only short side when you look in here. Right over here where it turns neutral, well, you're done with that, right? And now you're looking right over here at where your directional decisions are only long side. So that's pretty spectacular when you look at that. One more thing you might say, well, how about 24-hour charts? Does that work on that also? Let's take a little look at wheat, /ZW on a 24-hour chart. So there's a lot more lines on here. So because it's 24-hour, you can see I'll just look at this segment in here. All those positive signals, let's just keep coming this way. All the positive signals. Here it turns negative briefly as the slim ribbon flattens out, but then when it begins to widen again, it turns green. And you get those signals. Here you can see the slim ribbon flattening out again, not giving you a good signal, and then look at this decline that it catches with these signals all pointing to the downside. Slim ribbon being resistance, PO telling you that there is selling coming in, and all of a sudden something is changing right here as it goes neutral. That warns you right there. You're not really going to be looking for the short side trade anymore. And look over here where we are right now in wheat. Well, it's very, very flat in here and not really giving you any good signals in the wheat market. So that's a look at the short-term 24-hour chart in the wheat market, and it also is really good. So that's it. Looking at the slim ribbon PO, I think it's a unbelievable set of indicators for you to use to keep you on the right side of the market. Remember, the slim ribbon is free. You can put that up on Thinkorswim by downloading that script from our site and just go into the resource section and it's there. Or you can put that up in TradingView or Wealth 365 charts, available there for free in all of those also, and we'll probably be putting more. You want the signal indicator, the slim ribbon PO, you need to be a level 4 member at askSlim.com, and then you will be able to put that up only on Thinkorswim. And again, you can help us out by opening a Thinkorswim account, TD Ameritrade, right on our front page to do that. So that is Tools for Techs, and I hope you found that absolutely spectacular. Coming up, I'm going to give you our 1 to 3 month view of the stock market. But first, don't scroll forward. I want you to see this. This is so important because special things are happening here at askSlim. This is the last call for the askSlim trials before our price increases on July 26th. Our general membership prices have to increase on all levels. It's necessary to support the enhancements and expansion of our services. And it's necessary for us to build our team as we're putting on more people to be able to do this great work that we bring you and to really expand the things that we're doing. And our membership is growing really well. All premium members, as of the transition date, will be grandfathered in. So if you subscribe right now, you will get the current prices before the increases. We're now introducing Level 4 and Level 4 Plus. We've separated these. Level 4 Plus is currently filled. So all of the current Level 4 members will be upgraded to Level 4 Plus, and there's no price change for you. The new Level 4 Plus will continue to offer our personalized chart services where you can ask for 2 custom charts a week where we bring our analysis to you, our special cycle analysis. Due to that personalized aspect, Level 4, it has a maximum number, and we offered that last week, and it's now filled. Right now, you need to get on the waiting list by the 26th of July to hold this pricing. Just go to the askSlim.com front page, click up on the top, and you'll be able to click Level 4 and get on that waiting list. Then the current pricing will be held for you, and you'll be notified when a space is available there. The new Level 4 will no longer include those custom charts, so the prices are pretty significantly different. Everything else is included in the new Level 4, which just means you won't be able to get the custom, you won't be able to request the custom charts, and that is at a much lower price. Level 4 trial, first-time subs and upgrades. You can, if you're upgrading, you can get on that list. Those 10 spots we offered last week were filled, so we're at the cap right now, and the waiting list is building. So we really encourage you to get on there in the next few days. You're going to get our askSlim annotated charts live on your thinkorswim platform. You just download those onto there. You're going to get our proprietary studies, the option bias indicator, the market condition indicator, the Slim Ribbon PO, and our amazing reversal scout, which also helps you with directional decisions. Custom chart requests up to 2 per week with our annotations and cycle analysis. Our thinkorswim grid archive where you see all of our trade ideas, the charts on that, and our other exclusive charts. And you'll have full member access to everything in Level 3, 2, and 1. This special Level 4 trial is 35% off. It's $303.75. It's only $101.25 a month versus regular $159. The Level 4 price for the everything with the custom charts will be $239 a month starting on the 26th. So please go on to get on the waiting list. Hold this price, this special $303.75, only $101.25 a month. This is the last call for our Level 3 trial at this level. So at this pricing. Slimulator ranking system. That's the 84 best traded symbols with our cycle analysis, momentum analysis, our bias based on our algorithms that comes up there, and so much more in there. You're not going to believe how much is on there. Our trade ideas, you get one new one each day with amazing instructional video from Arvi. So you can really see how our analysis is done. You'll get great results from that. Arvi's directional decisions on that are up around 70%, which is phenomenal. Level 4 custom charts archive, we put new ones in there each week as our Level 4 members request these custom work, and then we put those links up in our site. You're going to get chart streams. These are live multiple time frame charts with our proprietary indicators on there. Absolutely amazing. We run these channels and you can see them live, and you're going to get everything in Level 1 and 2. Special trial for Level 3. It's 1/3 off the quarterly offer. It's only $200.25 for 3 months. It's only $66.75 a month versus the regular $99, what was regular. As of July 26th, it's $119 a month. So please do subscribe now in these next few days and get that special for level 3. In this case, you don't need Thinkorswim, you don't need anything special. Everything is inclusive in there. For level 2, you're going to get our SAR daily snapshot, which is very deep short-term analysis on the indexes. You're going to get our live chart stream grid with the S&P 500, NASDAQ 100, and Russell 2000. That's a 15-minute chart that has our support, resistances, acceleration zones, reversal scout. Really keeps you on the right side, tells you which is strong, which is weak. It's fantastic. You'll get the Future Speak show, which I do, and do 24 different futures contracts, part of our complete library of over 500 videos that you're going to get in 10 categories, and we update that weekly. You're going to get our Slimulator Momentum Tracker, which is for longer term holders, over 1,000 symbols, multiple time frames with our algorithms built into it, and gives you an output of a directional bias for longer term holders. Our weekly Spider Select ETF report, technical review on the S&P sectors, and our in our workbench trade planning worksheets. We're doing some great upgrades in there also. You can organize, prioritize, save all your work in there, and track your analysis there. Special, that says level 3, but it's really, 3-month level 2 is a 35% off to get everything you see on this page. $86 for 3 months. That's $28.67 a month versus the $45 a month that we had. July 26th, this goes up to $59 a month. So please do subscribe right now in these next few days and get this special pricing. 3 months, $86 for all of this. That is absolutely incredible. I want you to become an askSlim member right now. This is really the time to take advantage of it. And I'm telling you, our developmental calendar has got so much on there. You're going to be astounded at the things that we are bringing forth to bring your trading to the next level. Your success is our success, and that's all we want to do is share with you and bring great stuff to you. That is our trials. And only a few more days on this, and then the prices go up. Please take advantage of it right now. Stock market, we're going to do a 1 to 3 month view as we look at the SPY. So our analysis has said that starting sometime late June through July, we expected a market peak, and that the market was likely to decline through starting sometime in July and in through part of August. So we've seen corrections in the stock market, but really under the market. And the major indexes, which had a brief, fast decline of 3.6%, now rebounded very quickly and are at all-time highs again. At the same time, as I talked about in the beginning of the show, a lot of the other indexes fell much harder and have not had anywhere near the rebounds that we're seeing right now. The indexes are really very affected by the mega caps, which we believe will be correcting in August. So this is really kind of a rolling correction that's going on, and doesn't look like it's going to be anywhere near as deep as we originally thought, which was declines of 11 to 13% into August. Now it looks a bit different than that. We're going to take a look at that as we look at the charts in here, and I'm going to remove that, and now we're going to look at the SPY, SPY. So we're looking at cycle analysis in here. Cycle analysis, for the people that are new, looks at the rhythms in the market, the money flow in the market. And there are repeating patterns that are very visible when you look at all markets, and all of the repeating patterns are unique to those symbols. You can learn about that by going to our website to the workshop tab and look at the cycle analysis workshop. We have a lot of information there and a video you can look at and tell you a lot about our workshop. So what we're looking at right now are the rhythms in the market. I'm going to expand this out a little bit so you can see that the lengths of the cyclical patterns in here. These yellow ovals are corrective periods. When the corrective periods come, or when there are two cycles that are coming down in here, is when you get the biggest risk on the downside. The advances recently, and going back here through this entire year, have come after pretty long upside moves. This was 19 weeks from the last low. This was 24 weeks to that peak. This was 21 weeks to that peak. And right now we're at 20 weeks right over there from that low to that peak. So the cycle rhythms in here have been basically 27 weeks to the bottom, 23 weeks to the bottom, right over there. This was 24 weeks to the bottom. So you can see the repeating cycle lengths that are in here. I also want to look at something a little bit different that I haven't showed you before, and that is this kind of a repeating pattern that is coming in here as the market moves up to a high. What happened was, in this cycle right over here, before the correction, it had a pretty sizable dip here for about a week or week and a half, and then had one big upside bar here, made a high in the next week, and then the pandemic hit right over there. Here you can see the same thing. You had a pretty good downside week right over here, and both of these came down to that 13-week moving average, as you can see right there. Right over here, and then it came back and made one more new high, and then 21st week peak, and then came down. So this was 5.8 to 7% on the downside right there. This one was 10.8% here. Of course, this was the pandemic, which was 35%, and that same pattern is coming into play right now. So this right over here, the 20th week, it's kind of hidden in there. Let me just bring that right over here. You had this decline right over here. This was only 3.6% to that decline, and now you're coming up here and making a new high. If it follows the same kind of a pattern, you probably have another week to the upside attempt in here. But then we get into this period in August where it's likely to have a decline. You'll note in here it was about 2.5 weeks where it fell this 5.8 to 7%. And we are now looking at, basically upgrading this, because we had thought it would be 11%. But now with this stronger pattern in here, it's really likely that it won't be, and that the decline will be much more into this 5.3 to 7.7% where these supports are right in here. And you'll note that we have now added in an intermediate support buy zone right over here. The mega caps, they all align to a pullback in August. And that is, very much in line with the corrective period that we see right in here. But again, it's not likely to be as steep as we originally thought. And then after that, we get into the next rising phase right over here. So our 1 to 3 month view is that we'll probably get another little bit more on the upside right in here. There's a potential for it to get up to that 445 number right there. It's about another 60 points in the S&P 500. And then we get into this period in here where it's likely to give you what we think now is going to be that 5.3 to 7.7% correction right in here. So that is an upgrade. We're always going to do what the market tells us, and you can see in here the momentum is strong. During this correction right over here, the momentum did not ever turn negative, and that shows you what we call a swamped condition, where the upward component is so strong it doesn't really let the market correct very much, and this doesn't really get negative at any point. That happens in very, very strong market conditions, and we're still in that kind of a condition right now. If you look back at this one right over here, you can see that the momentum turned negative here for a brief period of time, but then turned positive again. That was around the election, and here it turned negative, and it stayed negative through the big pandemic decline. So very clearly what we're seeing in here is a lot of strength coming in, and that there's a pretty good likelihood that August brings you a further decline, that this was just a warning like we had over in this time period over here, and that the correction gets below those levels that we have been at, and probably down over 5.3%, which is not very big, maybe as much as 7.7%, and then get into this positive period. So this area right over here, where we get those declines and those mega caps fall, Amazon, Apple, Google, Microsoft, they all look like they're going to decline into that time period. Netflix, Tesla already quite weak and heading down into that time frame also. So that's what we think. But then that becomes a buy opportunity for this next period over here. We had thought that the bull market peak would be in the first half of the year, but the market is now telling us differently, and that more likely that the bull market peak and the high for the year comes out over here into October. That is a look at the 1 to 3 month view for the S&P 500. I hope you have found this to be an exhilarating show, that the information that we shared on tools for text, go back and watch that if you're watching a clip and you haven't seen that information is just enlightening to you. And I think it will be when you look at that, the importance of staying with the market direction. No matter how much you think something is going to change, the momentum indicators are really golden. So it's important to look at that. Please do go to our website and explore it. Subscribe to us on the YouTube channel. Make sure you give us a thumbs up. Follow us on Twitter at askSlim. And for any questions on our memberships, write to Brian at askSlim.com. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit and